Good evening. Ira Epstein with your Spider ETF end of the day market wrap up. And this is for Thursday, the 22nd of September, 2022. Well, a host of banks joined in today. We saw the Bank of England raise rates, Taiwan, Vietnam, Swiss Bank joined in. Bank of England, I don't know if I said them already. And there'll be a lot more coming down the road next week. We saw Bank of Japan do absolutely nothing today, and we saw that the Turkey Central Bank actually lowered interest rates. So the two outliers, what can I say, very different. But what the market's dealing with now is the reality of what we saw yesterday. And the question is, going into the weekend tomorrow, are we going to see some profit taking, short covering, bottom picking? Who knows? I watch CNBC always in the last hour of from 3 to 4, and I'm inevitably amazed at how they try to pick bottoms in the market, and they're going to pick it up. There's value here. Yeah, sure there is. What's the rush? That's what I don't get. Even if you buy it right now, the whole market's weighted against you. That I just don't understand sometimes the thinking. Not that I'm so good, but I just question, are they not ahead of themselves at this point in time? And that may well be this situation in this type of market. I mean, just think about it. The market's got the Fed enamored with the idea, and it's going to stick with it, of another 75 basis point hike in November. And then after that, 25s or 50s until they get ahead of wherever core CPI goes. And I know you'll say, what does it mean core? Well, they look at the CPI without the sticky part to it. We know that you have volatility in energy, whether it's up or down, they throw it away. Food, they throw it away. You can't throw away rent. You can't throw away wages, okay? You can't throw away a lot of that. When's the last time you, like me, got a lower bill from watching Netflix? I don't think so. Now they're going to have a new product that they'll con you in. Oh, you can cut your bill in half, but we'll let you watch our ads. Okay, that is one way to do it. And that business model may have to expand because people can't keep up with the costs. You saw today that FedEx wants to cut $2.7 billion between costs and raising of fees. So they just told you what they're doing for Christmas. Get ready. You're going to pay a higher fee for all your shipping. As they go, so will UPS, maybe even the Postal Service. I mean, everybody's jumping on it. What is my point? My point is we're galloping down that road of higher inflation. It isn't over. Just because the Fed said that they raised interest rates yesterday, that has to work through the system. It takes time. People think it's instant. It's not instant. The only thing instant is how the press writes about it, and analysts, they've already discounted it, and you're somewhere else. What makes you think they're right? When I look at Home Depot, and to me this is very important, if it breaks from here, it could get another leg to the downside. This is the area that it held last time. And I'm talking that June-July period before the rally happened. Is it a bellwether for what the market's doing as a whole? It might be. What's the pattern? Bearish, lower highs, lower lows. The market, you've got the 18 under the 100, the 100 under the 200. I mean, it's just a classic bear market. You can get bounces and negate the trend at some point. The Bollinger Band was hit. You had a battle, you bounced. The next stop for it is 264, about $5 lower in round figures. And momentum oversold, not embedded, oversold. To embed means you convert the momentum index from bouncing around between embedding, losing it, and then re-embedding. Now, when you lost the embedded reading, and that was all the way back over here, I do want to show this. It's pretty important. Let me get to where it's at, because you learn from these things. Okay, I'm going to take you through it day by day. Here we go. So here, the red line gets over 20. The odds favor you'll go to the 18-day average. It did it like that. Whoa. So now the market slips back. You now get both numbers. They're not under 20. They try first day of both under 20, second day of under 20, but not the third. Do you see that one? Number's 25. So you can get a bounce, but it doesn't mean you're going anywhere. As it turns out, you go to the 18. It didn't have to do that. You weren't embedded. Now, if the market starts failing, where's it failing? In between. Here's the key you look at. The 18-day average, and you've heard me say this if you're a regular, is the line in the sand. It's the neutral point. I teach over and over from the 18-day average of closes. I don't care if it's on stocks, spiders, ETFs, or futures. All of them. From there, the market decides what's its next path going to be. So that's, to me, is the zone. Obviously, the 200-day average in gray is above it, and the Bollinger Band. The market comes down, holds the support of the 100-day that it held earlier. So past support, it's still support. If it gives ground at this point in time, and this is today, then I look for the Bollinger Band again to be the support level. We're talking Apple here, right? So Apple's got a high PE earning. On a high PE earning, traders are now saying, and it's becoming sexy to say this. How's that the word? I look at the Goliaths, the Microsofts, and these other monster companies, and they're running with price earnings that are high compared to the rest of the market, which in the tech sector might be a 14 to 16, and they're running in the 20s. Don't they have to come down? That starts weighing on the market. So I'm watching what is going on there. Disney, you know what I've been telling you. They've got to redo their pricing. All right, who's going to Disneyland right now? Nobody. All right, I'm sure they'll come out and tell me the numbers are phenomenal. They're not. They can't be phenomenal. The kids are back in school. How can they be phenomenal? And, let's face it, that's where you take your kid. Parents go, grandparents go, everybody takes their kids to Disneyland. It's un-American not to. And away you go with this market because of what they've got. Now, bringing on a lot of new products with their streaming. Their movies are phenomenal. I mean, their franchise is great, but they're under pressure right here. Until the pressure comes off, it ain't off. XLF, the financial services. I was telling my clients, how could you want to own these financial services now? There will be a time when you want to own them. It's not far away. It's within a year, maybe 6 months. The market will say, okay, the worst of the interest rate play is over. The spreads will align themselves. The spreads, where the banks and the other companies that play in this particular sector can make money in a certain way. Right now, the problem is the bank has got a 2%, the 2-year note is what, 4.11, 4.15? All right, what do you think? You're actually making money on your deposit in the bank. Can you believe it? You're actually seeing money go in. I didn't say you get rich, but that's happening. I saw today traders on TV, Bloomberg and others say, what's wrong with people? Just go in and for the short term, buy the 2 or the 3-year notes, get your 4% plus. You're right where core inflation is, and you've protected your money. I can't argue that, okay? Duration, you'll probably lose some principal back, but you'll ride a good part of it out. You can even do some calls or whatever. Option strategies against it. I understood the thinking. In XLI, just riding the market to the downside. Now you're embedding. The industrial sector, well, gee, don't you think the Fed's after crippling this sector or damaging it? Crippling's the wrong word. Damaging it. Damaging in terms of slowing down consumer demand for goods. In turn, hurting employment. In turn, slowing inflation down. That's the goal. Wrong word, they're not out to take them off the map. But what they are out to do is hurt the consumer. And the consumer will then not buy. You don't buy, inflation, supply chain issues, everything starts contracting, going away. Semiconductors, as you know, I was just the other day, as we came up here, I said, I don't see how this market's going to hold up. Yesterday. Boom, right down to the Bollinger Bands. Okay, we know that we're throwing a lot of money in America into semiconductors, and that is something President Biden should be applauded on. He's bringing it home. He's getting us out of the Chinese thrall. We have this trouble with Russia. You don't think we're going to have that trouble with China? It's just when the Taiwan issue happens. It's not, is it going to happen? It's when it's going to happen. And this whole thing is going to replay in some manner get our stuff out of there. Get our manufacturing as much as we can away from them. Move it to Vietnam, move it to other countries in the region, whatever you have to do, but get out of China. They don't need us, and frankly, we don't want to need them. I didn't say we don't need them. We don't want to need them. In home builders, you're 626 or 629 in 30-year mortgage today. The most I've seen it in I don't know how many decades, but it's a long, long time. And as you can see, that weighs on the market. And I know you'll tell me there's a builder or two making money out there, and there's always somebody that figures the game out that can do it. But as a whole, it's a problem. The good news, and there is good news, is that in the housing market, we're not swamped with housing. So yeah, prices will back off inevitably. Don't believe they're going to just hang there. But it's not going to be a huge drop because you don't have enough supply. And once mortgages level off or actually come down a little bit, and that will happen too, not right now, but that will happen, well, the variable boys will go back to the game of let's do refi. Refi is what it's all about. You think you didn't see that game 20 years ago? I was in that game. Who wasn't in that game, okay? 30 years ago. XLE, lower highs, lower lows, energy still under pressure. Be careful here. Okay, I didn't like what I was looking at. You know, Russia calling up 300,000 troops, putting people out there, and at the same time, the European Union wanting to cap oil prices. What does that do for energy? Does that take things off the market? We already know that OPEC wants to keep cutting production. They don't even meet their goals, but they're going to keep saying they're going to cut even further. So those that can produce are going to cut. And those that can't produce, and that's why the quotas haven't been met, they still can't produce. And now you're going to get less from those that can. That's what's going to happen in the end, all right? Eventually, there'll be a number that you want to own energy at. Not now, not yet. Let it happen. In the gold market, who wants to own gold when you've got 4% two-year notes? You? Why? It didn't go up on the war in Ukraine. It certainly hasn't gone up in all this talk about inflation. So tell me why you want to own gold. That's the part I don't get. I love the gold ads, how it's done phenomenal for you. Does that look like it's done phenomenal? What part of this am I not getting? In GDX, same thing. If the gold's no good or under pressure, so should the miners be. All they do is have the gold under the ground. Now they got worse problems. Now they got to go to the bank, and all of a sudden, what might have been a 6% more, business loan is 8, 9, 10%. Now they got to say, hold on, maybe I can't do this right now. Because at the end of the day, it depends what size company you are and what risk the bank puts you in. You're not getting the best rate out there. You're generally getting a higher rate. You know it if you're running a business. Copper's the sleeping giant. Why? Because we're going to produce less and less of it, and when everything turns, you need copper for everything. The market's saying that's not the time right now. So I read the stories today in, I think it was Bloomberg, it could have been Reuters, and I'm laughing as I'm going, they're prepping you properly. It's a good story. But where are you right now? You're not at the point where you need that product. Right now, everybody's going, what do I have on the ground? I don't know if I need it anymore. People aren't buying. What's going on? What do I do? The good news is I read that China's business is picking up. Electricity usage is picking up. So they seem to be picking up a little bit. I wonder why. I was trying to figure it out. And then I went, my stupid. What's October 16th? What's today, the 22nd? They're going to look good for the party Congress. Are you crazy? You're going to look like a great economy. All the numbers. I don't care if people are dying of COVID. We'll say they're not, that things are better. We're going to get things looking good. So the party Congress goes in there and rah-rah. You know how that's going to work. TLT, the market coming down to the lower band. Okay, this could be an area where that market finally sees the short covering coming in. UUP, the dollar. No, I would never tell a client to buy over an upper Bollinger Band or be short underneath. a lower band like you have there. So I put it all together. I try to come up with a game plan for you, and that's what we do. So at 9 each morning, and I'm talking Monday through Friday, I start recording, typically around that time, and review about 45 charts on stocks. I'm always rotating the stocks, spiders, and ETFs. I cover, this is just some of what we do. It's always changing. There's no point in changing all the names. When's the last time you saw me with Home Depot, GameStop, AMC, ARC? I cover them all right? And I rotate everything out. Each Saturday that you just saw go by, I'm doing weekly charts to give you the bigger picture. And what we're going to do is show you weekly, daily, give you ideas that I've seen. I've done this over 50 years. I think I'm a pro at it. I think I'm probably better than most of the guys you see on TV with their chart analysis, but I'm going to talk the fundamentals. I'm going to talk what to do. And unlike everybody, I don't have something to do every day. I'm always amazed when I look at the end of the day on CNBC. There's always somebody buying something. Cramer's always looking for the next bull market. Well, this is a bear market, Mr. Cramer. It's not a bull market. Maybe you should play that type of the game. And I know what they'll say to me, rightly so. Ira, we're investors, we're not traders, and we have a 3-year outlook. And when I look at these PE ratios and what they are, that's what it is. Then you should buy CNBC Pro and go with Cramer. It's not a criticism. I happen to like the guy. I'm one of the people that stand by him. But there's a different philosophy. I'm a trader. I'm the guy looking to catch the swings in the market, occasionally hoping to catch that big one that goes for it. That's what it's about. I'm not an investor. So if you want me to be an investor, I'm the wrong guy. CNBC Pro or something like that might be just for you. Value Line, there's so many things out there. Different names, they're all there. Okay? But if you're looking to be a trader, use the advantage of what spiders and ETFs were built for. In and out, not day trading. In and out, swing trade. I'm the guy for you. I want to cover that, show you what I'm seeing. I want you to see it. The cost, folks, trust me. You're spending more if you're a Starbucks drinker than this is going to run you. In some cases, I run into it all the time, in one day you'll have paid for my 30-day subscription. One day. And now you got 24 videos coming at you, giving you ideas, each 16 to 20 minutes long, done in such a way where you can go from section to section, what they're doing, and it's telling you where you're at so you're not having to waste 16 to 20 minutes a day. Go right where you want. That's how we do it. All right. Go to our website under research or just follow my finger, follow the cursor here, give it a click on that icon that'll appear, take you right to the section, read about it, and decide if that's for you. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.